Absolutely. So I feel like at this point, everybody on this call should know who you are. I mean, you're an absolute beast. You've been in the business a long time. But for those that don't know you, give us the short synopsis of how long you've been in the business and a little bit about yourself.
Yeah, so my name's Jonathan Avila. I wrote my first policy December 19th of 2020. It was an Americo Eagle Premier. It's actually still in the books for about like $70. And was with our previous IMO. First year I wrote about 330K. Second year I wrote about 330, right around the same. And then last year about 405,000. Found insurance, totally broke. Was living with my parents, got divorced, lost my house, lost my car, and was just trying to figure out what the next step in life was going to be. And so I found insurance, and it totally changed my life. So super grateful for the opportunity.
100%. And if you wouldn't mind sharing, because you've got a very cool story, and you're definitely someone that's gone through a good deal of adversity. So if you wouldn't mind sharing a little bit about that and the place you were in and what caused that. You've certainly had a lot of highs and lows in the past 10 years.
Yeah. I owned a previous business. We were wholesaling medical supplies. And sorry, I got another call. Let me turn that off. Sorry about that. I own a wholesaling. We were wholesaling medical supplies, and in 2016 we did about $10 million in gross revenue. It was about a 10 to 15% profit margin. It was just moving mass volumes of diabetic strips. Overextended myself on some debt, and just pretty much it was a downward spiral from that point. So. Caused a lot of stress in my marriage, which caused a divorce, which caused me to sell everything and kind of rebuild my whole life.
Yeah. So talk to us about that, and coming into this business, because I feel like you're very grounded and you have the right mindset. So going through all that, obviously that sucks when you're going through that, but how has that helped shape your business that you're in now?
Yeah, like nothing. I was used to operating at a very high level of stress, and like anything in this business really just doesn't really faze me that much, like chargebacks or anything. Like doesn't really bother me getting rejected, because I just endured so much from my previous business that like really nothing even bothers me at this point. So if there's anything, that just learning to be level-headed and not letting the highs take you too high, not letting the lows take you too low. I've made millions of dollars in business. So, being able to manage money and finances is one of those things I was just used to operating for my previous business. So, yeah, that's kind of some of the things that helped.
Definitely, 100%. And so you joined, so that fell through. You had to rebuild from completely ground up. You decided to get into insurance. When did you sell? What date did you say you sold your first policy?
December 19th of 2020.
2020. So 4 years ago. So it's funny because we started at pretty much about the exact same time.
Yeah. I remember,
what were you?
Dude, I remember you in Boca. I was like, who's this kid Jonah from Chicago? He's definitely not from Chicago, but he says he's Chicago.
You're like, this guy's not a local to Chicago. He doesn't know the streets like that. But okay. So we started roughly the same time. And what did you start out primarily selling?
They had something called instant internet leads. So I sold about 100,000 instant internet leads, and then my first 4 months, and then in May of 2021, I started with mortgage protection and got absolutely smoked. Ended up spending a lot of money on fresh direct mail leads, and I would spend like 2,000 a week on fresh direct mail and maybe sell like 3,500. It was like crazy. And eventually I had a training call with one of my mentors at the time, and we changed the script, changed my presentation, and like it just clicked at that point. And I think in the month of May, I sold about 47,000.
Let's go. Okay. And you were working, so you were running, and when you were in our office, because you have your own office now, but we shared an office for a long, long time.
Yeah.
And remember when you were working out of our office, I remember you you ran some mortgage protection, then mail
Yeah.
got super expensive. You're paying 90, $100 per piece of mail. It's like, this doesn't make sense. So then you pivoted to final expense and you kind of
Correct.
got back into final expense. But then now you've shifted your pretty much sole and all encompassing focusing on yourself, but also your team onto IUL. So talk to us about why you really dove into IULs and why that made sense to not only transition the business you're running, but your entire
Yeah.
organization.
Dude, I love mortgage protection. And it's so funny because people don't even know that. Like, people think I just do like a final expense and IUL guy now, but I love mortgage protection. I was in 2022, I drove across the state of Illinois to lock out counties so I can get fresh direct mail. I was just so obsessed with fresh direct mail. And I was like starting to burn myself out, driving a bunch. I would drive like 2 hours for like one appointment. It was like, this does not make
Same.
It's not. This does not make efficient use of my time. And so, the thing about direct mail is we don't have control of when it comes in and how much comes in. So, 1 week we're in Chicago, I'd get 20 leads, 25 leads, and then the next week it might be like 4 or 5, and there was no way to to be able to produce consistently. And so I got into big on self lead gen, which is how I got into final expense. Just running final expense leads. I pretty much print my own leads at will. And then we started to expand to IULs, and that's been a huge game changer.
Okay. So it sounds like to me the reason that it made much more sense is because you fully control the lead flow when you're running IUL internet leads. You're never going to have a struggle with more than enough to work. And obviously much better ROI and a cheaper cost per lead.
Correct.
What's your average annual premium for IUL that you write?
I mean, on the low end, on average, I don't know, maybe 3,600 on the low end, maybe 2,400. Like minimum is like $200 a month. But the key thing is to knowing that it's not all target premium. So that's what the insurance side. So on a 2,400 AP, the target premium on that, if you're max funding it, structuring it correctly, maybe 1,500, maybe 1,200. So it's you do get some big ones. I sold a 6K AP last week, and the target premium on that was like 3,800. So that's kind of important to know.
Let's just for a second just bring it back to the fundamentals of an IUL. And let's say everybody in this call before this call didn't even know what the heck an IUL was. So explain to everybody, what does the target premium, max funding it, when you're paying into the IUL, where is that money going? And just break like IULs 101. If I never knew what an IUL was, explain it to me and how you sell the product.
Yeah. So an IUL is basically when you're paying your monthly premium, you essentially have 2 buckets. One bucket is for the cost of insurance, and what a target premium represents is basically the amount of premium for this policy to stay in force up until the age of 120. And it's not a hard and fast rule. It's just merely a suggestion from the insurance carrier. So you want to ideally be overfunding those policies. But yeah, the target premium is just basically the cost of insurance. And so that's the one bucket. And then the other bucket is just the cash value. And the cash value gets put into an index, and you receive what's called indexing credits. And obviously, the more you're overfunding it, the more cash value that grows, and the more the client has available to them in the form of cash value.
Okay. So let's say I only care about I don't care about the death benefit. I just care about the cash value. How are we structuring the policy then?
Yeah, so I will do if there is no concern about the death benefit, which is you'll have a lot of people like that. I'll do a minimum death benefit max funded policy, and it's going to be what's called increase. So it's a specific amount plus what's called the accumulation value. So every year as the cash value grows, so does the death benefit grow.
Okay. Gotcha. And let's say, because how are you typically structuring that? Are you usually doing the minimum premium? Are you asking them, hey, do you want a large death benefit? Do you want a mix of both?
Yeah.
How do you structure the majority of your policies?
That's a great question. And I would say how I'm structuring it all depends on what the client's priorities are. And so if they're saying, the question I ask is, hey, Jonah, are you more concerned about the getting the most bang for your buck and getting the highest death benefit as possible? Now, this one's going to earn the least amount of cash value, or you don't care at all about the death benefit and you care about the cash value the most, or a little bit of mix of both. And so the first one, if they want the most insurance, it's going to be like a smart solve, easy solve type of policy. Maybe Mutual Omaha or Ethos or, one of our other carriers that we have at Pinnacle. The middle one will be more like an increasing benefit, like the one I just described. And then the last one, which I tend to kind of steer folks towards, is the minimum death benefit maximum funded level policy.
Gotcha.
So it's going to be both a mix. It's a fixed amount of insurance, and it's going to have a decent amount of cash value.
Gotcha. Okay. And then you're getting the clients on the phone. What's their primary goal with this? Are they looking for something to, like, a tax-free retirement? Are they looking to borrow for something to borrow against for the real estate properties or other investments? Just a general tax-free cash accumulation?
Yeah. Our clients typically, we don't specifically, and the ad, it doesn't mention specifically becoming an IUL. It's more so about the becoming your own bank. And so we really don't talk about tax-free retirement in this scenario. It's more so just about having something that they can borrow against that's going to gain cash value. So I'm highlighting cash value. I'm highlighting, hey, they can overfund it if they want to put more money into it. What the legal amount is, what's called the MEC, modified endowment contract, with the most that they can overfund it in an annual basis. Guaranteed versus non-guaranteed. Simply, a lot of folks get scared by that term.
Can I stop you there? So for those that on here that don't know, what is a modified endowment contract? Guaranteed and non-guaranteed? Because I feel like we're going a little above some people's heads here.
Yeah, when we were doing the training the other day at your office, I was like, I saw some owls and deers in the headlights. Let me pull up with like the legal modified MEC. It's basically the limit that you could put in before the IRS views a life insurance policy as an investment vehicle, and then if you reach the MEC, then it becomes a taxable event.
Correct. Because so if you basically, guys, so if you have it's the minimum amount of death benefit in place towards the cash value, because you can't have $100 death benefit when you have $100,000 in cash value. It has to be equivalent for it to be technically legally classified as a life insurance policy, non-taxable versus taxable. So I don't know if you have a simpler way of describing that, but basically what that is. So like like what Jonathan said, if I'm a client and I don't care about the death benefit, I just want something to has cash value, then I just want the lowest legal death benefit in place without making that policy.
Correct.
So let's I really like the way you explain IULs to clients, because you do a really good job of it, where you go over a lot of the fundamentals and a lot of the basics, but you really keep it on a third grade reading level to the client. Because as you're aware, if you confuse the client or something you're not sure about, or if you overcomplicate it, confuse clients never buy. So let's just walk through. You just want to walk through your entire in-home presentation and treat me like I'm a client?
Sure.
So call me like I'm a client. Don't know what an IUL is. Never looked into it. Just filled something out about being my own bank, and I'm interested.
Gotcha. Ring.
Hello?
Hey, Jonah?
Yeah? Who's this?
Hey, Jonah. Good afternoon, sir. This is Jonathan. I was just getting back to you about that form that you had filled out on Facebook in regards to the infinite banking insurance. I'm assuming you remember doing that?
Yeah. It looked interesting.
Perfect. Is now a good time, or do we need to schedule an appointment for later today?
Now, how long is this going to take?
Well, it depends on the amount of questions. If now is not a good time, I can put you down at around 7:30 tonight. Does that work for you?
Yeah, that should work.
Okay. So that's if they're not available now, right?
Yep.
I want to schedule that appointment same day. I want to give them an option. I'm taking control. I'm leading. I'm guiding. I'm directing conversation. I've got an appointment at 7:30. I might ask them at that point, hey, what time do you get off work? If they're at work, and then book a time there. I'm booking an appointment on Calendly. They're getting appointment reminders to confirm and reminders. I'll do like 3 or 4 reminders before that call happens.
Okay. So Jonathan, let me ask you. So how many of your appointments do you one call close versus book appointments for?
Yeah. So I have a dialer, so the dialer books appointments for me.
Okay.
But I do give them. The script is pretty much based off if I didn't have a dialer.
I want to get there quick. Like, I really want to get this whole thing expedited.
Hey, Claudia, can you mute whoever's talking? Or whoever's talking, please mute.
It's like Bronson.
Sorry. Anyway, proceed.
Yeah, so the script is pretty much like based on if I were to be calling them.
Okay.
But yeah, so if they're not available, I'm booking an appointment, booking it on Calendly. They're getting a reminder. If they are available at that time, we're gonna knock it out. And I'll ask them, hey, is this so my leads, a lot of people are like very skeptical up front. So before I even they acknowledge filling it out, they remember it. Hey, before we continue any further, I'm going to send you my state license, and I'm going to verify that they got it. They're going to read my license back to me. You don't want to be slow about this process when it comes to credentials, because then you're going to get objections in the back end for their social or for their bank account. So they're verifying it, and they're going to know that I'm a licensed insurance producer before we move any further. Then I'm going to ask them, hey, is this your first time looking for any sort of infinite banking insurance? If they say yes, I want to know what happened, what stopped them from moving forward. Mm-hmm. And so I'll kind of like address, hey, you'll have a lot of people that talk to a lot of agents, and they didn't move forward because they didn't feel comfortable, or they asked for their social, or maybe they showed them, illustrations that were just out of the budget. It could be a myriad of different things, but I'm trying to get out ahead of objections. So I want to figure out what stopped them from moving forward that time. If this is their first time, now I'm going to be an educator, and I say, hey, are you familiar with how an infinite banking policy works? And then I'm saying, hey, it's either going to be a whole life policy where you receive dividends from the insurance carrier. Now, if it's a whole life, those are typically more reserved for like people that have lumps of money that they just want to dump in. I'll show them, infinite banking policies either through like Lafayette or Foresters. Most folks just, they have $300, $400, $500 a month they want to allocate towards something like this. If they're young enough and they're healthy enough, we'll show them an IUL illustration. And so I'll say, hey, it's either going to be a whole life policy where you receive dividends, or it's going to be what's called an index universal life, where the policy gains cash value and it's tied to an index. Are you familiar with how index funds work? Most folks say no. Can you educate me? And then I'll say, hey, typically how an index fund works is you participate in the gains of the market, but you never participate in the losses. For example, let's say the market goes up 20% this year. You're not going to get all the upside. You might get 10, 11%, but if it goes down 20%, you don't lose anything. And I'm like, okay, wow, that's great. And then I'm going to now kind of reframe the conversation, reintroduce myself. Maybe they didn't remember my name. Hey, once again, my name's Jonathan. All we're going to do right now is just run through a quick health assessment, 1 to 2 minutes of health questions, because you do have to medically qualify for these programs. 1 to 2 minutes of financial questions, because I do want to make sure that we're showing you options that are affordable and make financial sense. At that point, I'm going to send you some illustrations. If you like what you see, then I'm going to help you submit an application to the carrier. If not, then we can part ways as friends. And then I dive into the medical underwriting. A lot of folks, I feel like a lot of agents don't underwrite properly, and then you're showing illustrations for people that had cancer a few years ago. So I run through all the health and medical questions. And then, how I'm asking and trying to figure out a budget is I am asking them how much do they typically save that's not gaining any interest. on a monthly basis. And, I say, hey, typically we recommend adding a 0 to your age if you're trying to max fund these policies. Is that something that's affordable and sustainable? You'll have 50-year-olds that are, willing to lay out $500 a month.
Typically, we add a 0 to the age maximum. This is that affordable and sustainable.
Yeah, I say if you're trying to maximize, because I say that word, if you're trying to maximize on the cash value, because I don't want to come off as like some sleazy sales agent that's just trying to get the most money out of them. I'm adding that caveat, that plausible deniability, and asking them if you want to maximize on your cash value, we typically recommend adding a 0 to your age. Is that affordable and sustainable? And you'll find a lot of people say, "Yep, I could do it."
Nice. Okay. Do you have an IUL financial inventory sheet or a list of questions that you ask when you're going through the health questions and figuring out what the best option is for the client?
Yeah, we made one. I can send that over.
Yeah, you can send that over.
Yeah.
What are some of the common questions you ask on there?
For the financial, for the health questions?
Yeah.
Yeah, heart attack, stroke, or cancer, any diabetes, any history of asthma, COPD, any history of hepatitis, liver or kidney disease, any bankruptcies, any history of felonies, because they do ask those on the IUL applications. Many medications, because a lot of people take depression medications that are declinable. And so once I kind of figured out if they're healthy or not, then I'm going to show them the illustrations at that point.
So pretty straightforward, pretty simple. Okay. And then where are we going from here then?
Yeah. So I do this 100% over the phone. So I'm like, all right, so basically the next steps, I use words like that to kind of explain the process, because I think little bridge words like that are important. Hey, so basically the next steps are, I'm going to send you over some illustrations. And what we're going to do, let's say they've already agreed that 500 is affordable for them. I'm going to show them a 350, a 500, and then I'll show them like a 650 a month illustration. And
are you texting them the illustration? Because you said it's all over the phone. So you're just texting this, emailing this.
I'm emailing
most
them.
Comfortable.
Yeah, and a lot of the clients are young enough to be able to do that pretty quickly, and so they're able to figure it out as I send them the illustrations. So I'll send that over. Something that I think is important that we don't talk about, like on training, is like the little nuances of like, hey, did you receive that? Did you get that? Okay, any questions? And so, for instance, let's say I sent you over $150 a month. I'm going to email it to you. Hey, you're going to be receiving this email. Now, this email is I have at avilainsuranceFinancial.com. That's the name of my business. That's my at. Like little things like that, as opposed to like a Gmail account, add to your level of credibility and rapport. And then I've got my good friend Benny created like a signature, like a little signature that shows my picture, final expense, annuity, mortgage protection with my state license. All of this is to be able to build rapport and credibility. That's the whole purpose of all this. And so I've sent that over to them. Hey, I sent you 3 illustrations. I'm going to have you open up the 150 Jonah max cash level illustration. Do you see that?
Okay. Yeah, I just got it.
Perfect. So just going to run through this briefly. So in this situation, I'm just pulling up a random illustration here. It's $150 a month. So if we're to set aside $150 a month, Jonah, what that gets you is a $183,000 death benefit. And that's going to come, that's what's called a max funded policy. So basically what we're doing is we're buying the least amount of insurance. We're buying them, getting the most amount of cash value. And the cool things about these policies, now I'm going to have you go down to page 2. Let me know when you're there. Okay, I'm there.
Got it.
And so in this situation, I'm using the Ethos IUL Emeritus.
Do you have an illustration you can screen share to walk us through how you go through it?
Yeah. Let me just pull up my email here.
Sweet. Hey Claudia, does Jonathan have screen sharing abilities?
It looks like Henry just asked, what's the most amount you can max fund the policy? That really just depends on their age. I mean, we've had clients do up to like 1,300 a month. You can do way more, depending on the carrier. National Life Group goes up to $1 million, and depending on how you structure the policy, I mean, you can have people doing, 10, 15K, 20K a month. Let me know if it looks
Do you
like
have screen sharing abilities?
No.
It's not letting me recon host. Not letting me make Claudia host.
Hey, while you bring that up, can I ask a quick question?
Yeah, let's open up the questions.
Yeah, so borrowing against it, I know, you want to leave it in there for at least 10 years to have like the best like compound interest on it. Now, because I do have people that's asked me like, hey, how soon can I take this out? And I think I've heard like less than 10% you can take out without like getting penalized. But I mean, I know you probably want to tell them, find something that's comfortable that
Sorry, Jonathan, you can share your screen.
Cool.
But yeah, just trying to understand that better. Like, if somebody that's trying to get access to money quick, if they are putting, 13 grand a month in or something like that, how soon do you see them trying to get it?
Yeah, I typically recommend a minimum of like 5 years. But I'll show them the illustrations on like what's available in the form of surrender value. But I'd say, hey, we typically recommend at least 5 years. But you could take this out at this time based off this rate. I hope that answers your question. Okay, let me know if you can see my screen here. Can you see it?
Yes, sir.
All right. So the name of this company is called Ameritas. They're A-rated. They've been around over 100 years. And basically what an A rating means, Jonah, is that if everyone were to pass away on their books on the same day, they have enough liquidity to pay out all those claims and still afford to be in business. Now, if we were to set aside the $150 a month, that's going to get you a max funded policy of $65,000. You see that there?
Mm-hmm.
Yes.
I see that.
Perfect. Now, what I'm going to do, I'm going to have you scroll down to page 2. Some of the cool things about these policies, Jonah, is that they have what's called living benefits. So with Ameritas, they have 3 living benefits: a critical, chronic, and terminal illness. If God forbid you were to have a heart attack, stroke, or cancer, you're able to accelerate the benefit up to 25%. So in this scenario, it's about $16,000. If you're to become chronically disabled, no, that's not like if you were to slip and fall or stub your toe. This is permanent disability, or you can't perform 2 of the 6 daily living activities. You're able to accelerate 50%. Or in this situation, it'd be $32,000. And if you become terminally ill, you can also accelerate the benefit up to $49,000. That's where the doctor says you have less than 24 months to live. Now, Jonah, do you see that part where it says a growing cash value?
Yes, I do.
And you see the part where it says projections assume a weighted average annualized return of 5.79%?
Yes.
So basically that term is what's called non-guaranteed. And so what the term non-guaranteed means is we can't predict the future or what the future is going to hold, but we can have a pretty good idea based on the historical data. And the average over the past 20 years, this particular index is performed at is about 5.79. And so based off that assumption, by the age of 55, you'll have about $5,000 in this policy. By the age of 60, you'll have about 14,000. By the age of 65, have about 27,000. By the age of 70, 43,000. And I'll highlight those points: 80, 72,000, 85, 94,000. That's all I'm showing them there. And then I'll go all the way down to the MEC, where it's the 7 pay. Let me see where I can find that. And I always make sure that they're with me. Hey, any questions about what I just explained? No, yes. You want people to have questions, and you also want to do temperature checks to see if there's any buying indicators, because they're going to pretty much sell themselves. So in this scenario, the 7 pay premium is $52,000. I'm sorry, 5,200. That's the most that they contribute to this policy in a calendar year in the first 7 years. The cool thing is actually after 7 years, there is no limits. And I'm going to go down to the ledgers right here. Hey, Jonah, I've scrolled on this page. Is going to be page 13. This is page 13 of 17. Let me know when you're there. Okay, you're there. Perfect. Now I'm going to have you focus on the right-hand side of the screen where it says non-guaranteed policy values. Do you see that there? Yeah.
Yes,
okay.
I do.
Perfect. So, this is kind of a breakdown of what the projected return is going to be. So by year 10, you're going to have you would have contributed a total of 18,000. Now you're going to have about 14,555 in cash value, all the while protecting your family with a $65,000 death benefit. If we fast forward to year 20, you would have contributed 36,000 to this policy, and now we have a cash value of 43,506 with a death benefit of 65,536. Now we're going to stop paying those premiums. Most folks want a reduced bill once they hit retirement, so we're going to stop those premiums. But as you see, the money's going to continue to compound and grow over time. You would have still had a total annualized outlay of 36,000, and now you have about 72K in cash value. Any questions about what I just explained?
No, this all looks pretty straightforward.
Perfect.
If I read something about, what if I wanted to cancel the policy down the road? What would that look like?
Yeah, absolutely. If you wanted to cancel the policy, whatever's available in the surrender value would be available to you. But let me ask you, is this something that's affordable and sustainable for you?
Yeah, I think so. What about, if I borrow against it, do I have to pay the loan back?
Yeah, so you have two options. If you don't pay the loan back, it'll just get reduced from the death benefit in the event something happens to you, or you can choose to pay it back and the money's going to continue to compound and grow.
Oh, wow. So this looks really good. So this all seems too good to be true.
Yeah, that's funny. I do get that a lot. But it's just really just a matter of seeing if you even qualify. Did you want to look at different numbers, or which one of those numbers did you like that I showed you?
I think for now, let's start with the lowest option because that'll be comfortable for me. If I want to bump it up down the road, do I have the option to do that?
Yeah, absolutely. We always recommend if you wanted to put more money in, you can just overfund the policy, and that just goes straight to the cash value.
Okay. My grandma also just passed, and we had some cash from her. I got about 10,000. Can I put that 10,000 in my policy? Right, as well in the first year?
Yeah, you absolutely can, depending on the limit that you're legally allowed to. Let's say it is. If it is, I'll say yeah, you can.
Gotcha. Okay. How do you usually structure that? Do you do one lump sum payment, or do you stage it out over the course of 12 to 36 months so the cost of insurance doesn't go way up? How do you do that if they are putting in lump sums up front?
That's a great question. Depends on the carrier. For folks that want to put lump sums in, you can show NLG's illustration. Really pretty neat that allows you to do that and show that. I'll probably go with NLG if they're talking about putting in lump sums.
Gotcha. Okay.
And that'll reflect, to make sure the deposit doesn't lapse or you're getting too much insurance. So it'll count for that versus the other policies like an ethos or a mutual. It's a little bit more difficult to show that on the illustration.
Sure. That makes sense. Okay. And let me ask you this, Jonathan, where do you get the most pushback throughout the process? I
mean, you get a lot of pushback from the legitimacy. Is this real? So you want to be able to, make sure that you act as a professional. These people are trusting you to put in significant lump sums of money into this policy. So you want to be sure to present yourself as a professional and as an expert. So, little things like having a decent email adds so much to your credibility that, if they're just sending it from my personal email is like, look, it's john@gmail.com. Like I would never send an illustration from that email.
Right.
Stuff like that.
Okay. So having a personalized email, having an email signature, with, state licensed underwriter, IULs, mortgage protection, retirement accounts, and then with your picture of yourself, whatever, at the end of the email, that's huge. Obviously having a digital business card, you can text them, is a big deal. At the beginning of the appointment, what do you send them? You send them your business card and a picture of your state license?
Yeah. Yeah. I mean, right now, dude, I'm sure there's better ways to do it. I have a Google Drive with a link of all my state licenses. I know there's better ways. I know I can just create a digital business card and have a bunch of links. I just send them a Google Drive link, and it works. Okay, you click that, you see my license. And then I go from there. As far as pushback, as far as like getting folks over the finish line, it's just a matter of making sure that you're finding something that's within their budget.
Yeah.
And so not showing them like some crazy high price. The crazy thing about these, these leads and these policies is you almost got to downsell people sometimes because it looks so good on paper that, people want to put in as much money as they possibly can. And so you want to make sure that you're writing, business that's going to stick on the books, and making sure it's affordable and sustainable for them.
Gotcha. Okay. And then what are the most common objections and rebuttals that you typically get that we haven't already gone over?
Let me think about it. I want to talk to my that's like a big one. And so even with those, this is almost like I would say close to a mortgage protection, like where you want to do, if you can, ideally, sit with both the husband and wife.
Mm-hmm.
So that would be important. Sometimes I do show options for folks that, they're married and, you can only get that one person on the phone at that point. But there is a lot of money in the follow-ups. I know we're taught to just try to close them right there and then it's done. But with these particular leads, there is a lot of money and just like getting back to people and, finding something that's affordable.
Yeah. And also
Mike closes the majority of his policies. Just like, these are like 30-day-old leads that he's closing. And he had an initial contact, a month ago.
And well, it's also, they're paying more into it than a typical mortgage protection policy. So it's a bigger commitment.
Correct.
So that makes sense. So you're going to have more follow-ups with these leads than you would, running mortgage or final expense.
Correct.
Okay. Awesome. All right. Well, we're looking at, we're about 40 minutes into the call. So let's open it up for, I know there's a ton of questions. So anybody that has questions, please unmute and ask Jonathan.
Hey, Jonathan, I got a question for you.
Yes, sir.
So I've been doing IULs for a few weeks now, and every now and then I'm running into people who see the ad and they're like, sweet, I want to put $50-$80 a month in, become my own bank, make generational wealth. What do you say to those people to set proper expectations? Because I mean, min facing max funding the target premium is like $120.
Yeah. You're not really servicing them. When they say that, I would just say, if you're really trying to grow your money, I think the simple rule, if you keep it really simple, just adding a 0 to their age, that is a good amount of like overfunding. Like having someone put in even a 50-year-old trying to put in $150. I mean, I always do in that situation. I'll always do like an increasing benefit to just try to maximize on that policy for them. But I'll say, hey, if you're trying to maximize, we typically recommend X amount.
Do you have a threshold of like what they need to be paying to do a min face max fund? Because I've done an IUL where somebody's like, I want to put $50 a month in, and I was like, cool. So what we do in these situations, we just get you an approval. You can build a relationship with the carrier, and then in 5 years, 10 years, they're young, they're like 30, 28 years old. If you do want to overfund it, then you can. Is that something you would recommend doing, or how would you approach it?
I typically don't do that. I just said like, hey, this one, I'll do like an easy solve or smart solve in that situation. Because I mean, you're really just you're not maximizing on the policy. And so I'm just going to get them more insurance if they can only afford $50.
That's what I'm saying. Like you get them started with an IULE and let them know that
Yeah,
when they have more money down the road, then they can,
yeah,
set up a properly structured one.
yeah.
Okay.
Yeah, I'll position that. I say, hey, this one does gain some cash value. It's not going to be, you're not maximizing on it, but it is going to gain some cash value.
Okay, thank you. And I love the line, how much you saving a month that's not gaining any interest. Write that down. That's phenomenal. Thank you.
Yes, sir.
Yeah. That is fire. Who else? Who else?
You know, let's talk about like the different ones. You showed Ethos. You like Ethos the most. I know you got F&G, you got Mutual. I know Foresters ain't really a real like index one. But like, is it I know it's pretty much based off what their needs are. I guess, do you have go-to?
Yeah. I mean, I take a lot of things into account when I'm showing applications and showing illustrations. You know, how long is underwriting? Am I going to be stuck in underwriting? F&G's got great products, but my personal opinion, they get stuck in a lot of underwriting. So I tend not to show them as much. I do a lot of the mutuals, the IULE, and I'm just max funding those. Pinnacle is partnering with Columbus Life. It's have one of the best performing IULs on the market, and that's all simplified issue. So once we get those contracts, we're going to be pumping those out a lot. But yeah,
Columbus Life, yeah. And then we're also getting F&G. Which you guys should be getting within the next 2 weeks here.
That instant decision IUL is coming out when?
Instant decision. Yep. Coming. Claudia would know more about that than I would.
Quarter 3.
And then also the Foresters Whole Life product is coming out this fall as well, which is going to be huge.
Yeah, North American. Actually, we just got the North American contract. Very, very solid. They have a solid GUL, guaranteed universal life. They got some of the best. North American has some solid IUL products.
100%. So, cool. All right. Any other questions?
So I'm just starting. I'm working on my first batch of leads, and I'm having a hard time proving my legitimacy. What techniques or what advice do you have to prove legitimacy better in the beginning of my career?
You're having trouble like proving credibility, is what you're saying?
Yeah, exactly.
Obviously sending a license is one piece to building credibility, just asking the right questions and using terms and phrases that don't make you sound like a newbie. So I would say just get with your upline and just make sure that you're not lowering your value in the type of words that you're saying. But I would say sorry, I get a bunch of texts. Sending a license is important because that does help build credibility.
Yep. Yeah. Sending your license, your digital business card. If you're writing applications, sending crank wheel. If you don't have crank wheel, you guys all should have it. Crank wheel, screen share your screen. But the biggest thing is it comes down to your level of confidence. Because when I get a client on the phone, I honestly don't show them my state license or my digital business card 99% of the time. But I'm speaking with such a level of confidence and such a level of conviction as to I know exactly what I'm doing and what I talk about, that the client has no doubt in their mind that I'm 100% legitimate. So yeah, like all those things are important in exactly everything Jonathan said. But the biggest thing is your confidence and your belief in yourself. Because if you don't sound confident in yourself, the client's gonna have a hard time trusting you.
Yeah.
I got a couple questions for you, Jonathan. So
yes,
when you're talking about these clients, are you showing them on the illustration what that would look like? Like with NLG, you can turn on the guaranteed income rider. Are you showing them like, hey, at 65, you turn on the guaranteed income rider, you pay this amount of money for the rest of your life. If you borrow against it 15 years in, you're gonna be this, or do you just keep it pretty simple, pretty straightforward?
Yeah, I keep it pretty simple, to be honest, because they're not. The ad really isn't specific about like tax-free retirement. If they bring it up, if they ask about it, I'll obviously show it to them, and I'll show them like distributions. But I typically don't show them like distributions.
Gotcha. Cool. Any other questions? All right. Well, now everybody wants to be quiet before they're dropping all sorts of things in the chat.
Actually, Benny asked a good question. What do you do with folks that don't qualify for an IUL, which is very, very common?
Yes.
I'll simply say, hey, you know what? It looks like you don't qualify for a traditional IUL. We do have some whole life policies. They are geared more towards the insurance coverage, and they do gain some cash value. And I'll say, hey, you know, if we're to do this, if I already established your budget, you know, if we're to do $200 a month, that's going to get you about $80,000 in whole life coverage. I think Baltimore Life's got some solid whole life products, and that with higher face amounts. I'll say, hey, this is going to, you know, for $200 a month, this is going to be, you know, cover you with $80,000 of whole life coverage, and you can borrow against that. Most folks want just something they can borrow against, I realize, and something that gains cash value. That's kind of the most important things right now.
Cool. All right. Well, Jonathan, brother, you're an absolute savage. I appreciate you hopping on the call and
Thanks, bro.
reporting to the team, man. So,
Absolutely.
all
If
right,
anyone has
everyone.
any questions, you can reach out to me.
Yes. And not only questions, but you've got your leads on Pinnacle Lead Hub, right?
Yes.
So if they want to work your leads, what do they got to do? What leads are they? How much do they cost? What are the details to work the leads you're running?
Yeah, the Gen Life leads are, I believe they're $9 on the Pinnacle Lead Hub, and the IUL leads are, I believe, $19, I believe. But yeah, check them out. Let me know if you have any questions.
Awesome. And then, Jonathan, if people want to get a hold of you, how can they reach you?
You can hit me up on Instagram. It's real Jonathan Avila, like my name. Just follow me. I usually respond pretty quick.
Awesome. Cool. All right, brother. We'll appreciate you hopping on, pouring into the team. Everybody, let's make it a positive rest of the weekend. Let's help some families.
All right, guys.
Catch you all soon.
Thanks, Jonathan.